So we titled our theme this evening, Innovative Investing into the Right Metals. As most of you know, we're listed on the London Stock Exchange and Johannesburg Stock Exchange under the ticker tapes THS and THA. So before we get into our business, I thought it would be great to reflect upon our core values. And at the forefront of our value philosophy is safety and health. And we take this seriously, and we have a mantra that says a safe and healthy operation is a productive and profitable one. And I think we'll illustrate that later tonight during the presentation. We do take responsibility for the environment that we work in and the impact that we have on that environment. And we'll touch on our ESG imperatives and objectives later on. We believe that we conduct ourselves with integrity and honesty. We're committed to the upliftment of the local communities and general stakeholders. We do subscribe to the Paris Accord and have a plan to reduce our carbon footprint. And we like to use innovation to challenge convention. And I think the Tharisa mine is a point in case which most people would have considered not to be viable, but the method in which we've exploited and extracted the commodities has proven to be resilient. And ultimately, and I think of concern to this audience, is that we strive to achieve superior returns for shareholders. So if you look at who we are, we're blessed with a massive resource in the southwestern limb of the Bushveld complex, which is the world's largest geological formation for platinum and chrome. And to that end, we have some 43, just short of 43 million ounces of platinum group metals and just over 172 million tons of chrome metal contained in our resource. What this means is it gives us this exceptionally long life in terms of our mining operation. We're an integrated co-producer of platinum group metals and chrome concentrates. Very unique in terms of the business model, sharing a single mining cost with a dual revenue stream. We have a successful track record of operating this mine and others prior to the Tharisa mine and bringing it up the value curve and into steady state and growth production. Importantly, we have 14 years left in our open pit mine. Thereafter, we've scheduled a 40-year underground mechanized mine. As mentioned previously, we're profitable throughout the cycle. We've enjoying very healthy PGM basket prices at the moment, but there were times where it was fairly marginal for most platinum group metal producers, and we still remained profitable with our business model. And I think key to our capital discipline is the fact that we've been a consistent dividend payer. If one looks at the map of the Bushveld complex, you'll see we're located just north of Johannesburg, some just shy of 100 kilometers away from Johannesburg in the southwestern limb of the Bushveld complex. And then we'll talk a bit later about our exciting opportunity in Zimbabwe, the second largest geological formation of platinum group metals in the world. So touching on ESG, which has become very topical of late, but I think we're pleased to report that it has been entrenched in our ethos and our philosophy from inception. So quite easy for us to report on it in terms of what we do. I think of great importance is that the communities that we operate in are an equity holder of the Tharisa Minerals Company and in turn the Tharisa Mine. They own 6% of this company. So we have a lifelong commitment to the upliftment and the betterment of this community. We engage in various upliftment programs, infrastructural programs. We employ out of our 1,800 direct employees, some 700 people from the local community. And we've skilled and trained these employees through our various learnership programs, our graduate programs and internships. Currently for this year, we've had 98 enrolled. And then we also offer to the broader community adult education programs. So providing them with a school leavers certificate as a qualification, not only for our employees, but for the broader community. As mentioned, safety is a core priority and value of ours, and pleased to report that we've been 6-year fatality-free, 5 million fatality-free shifts. Now, mining is by nature a dangerous industry, and we're very pleased with the performance. However, we won't rest until we achieve our objective of zero harm. I think being a new mining company in South Africa, we were able to make the right choices up front, and to that end, all our employees on private medical aid and have provident fund or pension fund compliance for retirement. COVID-19 hit South Africa like the rest of the world, and we were very pleased that the measures that we put in place, the investment in clinics, isolation centers, and vaccination centers and facilities have paid off, and we've had relatively low impact in terms of lost man hours, but also in terms of infection rates and very good recovery rates. We also provide protection gear to the communities in the form of sanitizers and local PPE or protective gear to the local schools as well. When we look at our contribution to government, we pay fairly hefty taxes and royalties in the order of almost $52 million in the year 2020, and wages and salaries over a 2-year period, almost $90 million. So a key contributor in terms of our wages and salaries. And then when we look at our ESG objectives of reducing our carbon footprint by 30% by 2030 and becoming carbon net neutral by 2050, it seems like a very lofty aspiration. But when we look at the energy mix that we have on our mine site, we predominantly utilize diesel as the form of energy, and there are some key initiatives that we are undertaking at the moment to meet these milestones in terms of reducing our emissions, looking at alternative fuels, biofuels, and synthetic fuels. Thereafter, looking at different drivetrains, whether they be hybrid, battery electric, or hydrogen fuel cell technology, feeding into the circular economy of using our platinum and iridium to produce that hydrogen. I think for a company our size, we're very pleased that we can report on scope 1, 2, and 3 emissions and developing that roadmap to carbon net neutrality by 2050. So this last year has really been a standout year for us, this financial year 2021. Our year end is 30 September. So we've just commenced now our first month of our 2022 financial year. We delivered record mining rates, record processing rates, and importantly, we continued on that trajectory into our fourth quarter, which saw us producing record platinum group metal production at just shy of 44,000 ounces and chrome concentrates at some 396,000 tons per month, the best on record. And what that translates to is us meeting our guidance for the full year of 157,700 ounces for the financial year and 1.506 million tons of chrome concentrate. Again, the best on record. I think if you look at the two bar charts at the bottom, you'll see that our guidance for 2022 is showing some material increases from this prior year's performance. To that end, we're guiding the midpoint of 170,000 ounces in terms of PGM production, and importantly, 1.8 million tons of chrome. And this really on the back of us commissioning or cold commissioning the Vulcan plant, which is a proprietary technology which we'll unpack a bit later to recover ultrafine chrome concentrates. I think pleasing to see was our increasing cash position at the end of the year at some $83.4 million, and this post a $10.8 million interim dividend payout at the interim period post our March results. So just moving on to the Vulcan plant, I think we're very pleased that we are at a level 1 lockdown in South Africa, which allows us to bring visitors to the mine site. Yesterday we had 13 analysts on site, and there's a photo from the visit yesterday at the Vulcan plant, and you can see the construction site below, and now in commissioning of the Vulcan plant. So what does this technology that we developed internally do? What it does is makes us more efficient. It allows us to recover ultrafine chrome that historically the industry has been depositing on waste storage dams. And to that end, we're looking to achieve a 20% increase in our recoveries to above 82%. I think it's very rewarding to see the R&D team at Tharisa proving up this process internally, running demonstration plants for 18 months and seeing a significant capex being deployed in what is a very impressive multi-stage processing plant, some $55 million spent. And importantly, this was funded from internal cash flows. So when we look at our net cash position, we look at the cash, you can see the significant cash generation of the business in this last financial year. I think pleasing is the procurement was the majority, 90% procured in South Africa. In terms of job creation, we had over 1,000 contractors sourced locally, and this new plant will secure 100 new jobs from the broader community that we operate in. So really a good story in terms of local procurement and upliftment and employment. And I think what's key here is that with these additional chrome tons, which equate to some 400,000 tons on an annual basis, taking us to our 2 million ton target, we reduce not only our carbon footprint for every unit of chrome that we produce, but also our unit costs. So a significant milestone in our growth trajectory. So if we look at our business and we look at the longevity of what we've got a long life asset, and I think this is key to the sustainability of our business. We have a rising production profile in the next 14 years open pit and thereafter by developing underground mines. So you'll see the top graph there, line graph, shows the historic chrome concentrate prices and the long-term consensus pricing. For the last financial year, we averaged $154 per ton, and consensus pretty much flat at $150 going forward. If we look at current spot prices at around $165, so some appreciation there. PGM basket price, we saw record high prices in this last financial year for our PGM basket, hitting over $4,000 an ounce and averaging just over $3,000 per PGM basket ounce for the Tharisa mine prill split. You can see there that consensus has it reducing to some $1,600 over time. We think this is really relatively conservative in terms of the backdrop of demand and the hydrogen economy coming into fruition and into reality. If we take a step back and we look at the market and our listings and the brokers that cover us, so we obviously have coverage in South Africa, the 3 brokers in London, all of them have a strong buy rating and on average have a premium to the current share price of around 73%. I think what's key to note here is that they've all recognized the cash generation potential of the Vulcan plant coming on stream. So if we look at our business in terms of sustainable long-term returns, we look at the 3 pillars of our capital discipline. So on the one hand, we like to offer our stakeholders and shareholders growth through organic opportunities, through optimization, and achieving the milestones that we achieved in terms of production were the product of a number of those organic initiatives, and the Vulcan plant being a large capital investment to that end. We are looking at downstream beneficiation and looking at optimizing opportunities. I've spoken previously about beneficiating our own PGM concentrate. We have our own small refining pilot plant at the moment with the intention within 24 months to look at refining our own product to final metal, capturing that value. And then we'll talk about the external opportunities. I think what's important is that we continue to invest in our business and in the sustainability of our business. And you can see that profile over the years, obviously looking very significant in this last financial year, 2021, when we add in the Vulcan spend. But I think core to our capital discipline is returning value to shareholders in the form of a dividend. We've been consistent. Our policy is a minimum of 15% of net profit after tax, and over the last 6 years we've paid $48.5 million up to the interim period, with our final dividend to be declared or proposed to shareholders before the end of the year. So if we look at our business and we look at the potential, we've obviously discussed the Tharisa mine, the Vulcan fine chrome recovery plant, but we've also ventured into Zimbabwe, where we've started development and construction of our Selene chrome mine, which is an open pit mine looking to produce a premium product, and that should come online in this final quarter of the calendar year, our first quarter of 2022. And then we'll unpack the Karo Platinum potential project. But if we look at beneficiation, I speak about our research and development company and team. This is housed in Arco Metals, and we've recently relocated to a new beneficiation site where we're doing all the trials and tests and the PGM smelting work there. So very exciting. We have wholly owned subsidiaries that specifically look after marketing and sales and logistics and movement of our product. So jumping further north into Zimbabwe, the second largest PGM deposit in the world, known as the Great Dyke, we're surrounded by very successful, profitable, low-cost mines in the form of Mimosa, which is a joint venture between Sibanye and Impala Platinum, Unki Mine, which is the Anglo Platinum mine, and then Zimplats, which is the Impala subsidiary on the Great Dyke. The land that forms the Karo Platinum mine or project was historically owned by Zimplats, and they declared an indicated inferred mineral resource of some 96 million ounces. This is truly a tier 1 asset over some 24,000 hectares of land. The area has been demarcated as a special economic zone, which gives the operators certain fiscal benefits, duty-free importation and export of goods, and allows certain tax incentives through the development and production phases. Where we are today as Tharisa, we currently own 26.8% of Karo Mining Holdings, with a discounted option to acquire a further controlling stake of the holding company. We've been undertaking exploration programs and development implementation studies, and we have now gotten to the point now where we have delineated a high-grade, long-life, open-pit resource with a quick-to-market strategy where we'd be able to bring this project online within the next 24 months. And importantly, using the skills and the learnings and the history track record of the team to bring this project online. In terms of the corporate process, we're looking to announce the way forward in the next 2 to 3 weeks, giving color as to the shape and size of the transaction, the capex, and the rollout plan, and indeed the fiscal benefits in terms of NPVs, IRRs, etc. So a very exciting project, truly a tier 1 opportunity for us. In terms of the platinum group metals, there's been a lot of debate and discussion around the 6 elements: platinum, palladium, rhodium, ruthenium, and iridium, and their use and the supply deficit balance. I think we're on a great trajectory in terms of increased emissions, in terms of internal combustion engines, and we saw demand outstripping supply in terms of palladium and rhodium in particular, with platinum moving into a balanced position and in fact forecast to go into deficit. That all changed on the back of the semiconductor chip shortage affecting and impacting auto manufacturers and sales for this year and predicted to go into the new year. I think what's interesting to note is that we've seen some opportunistic buying and stockpiling of these elements during this time of lower prices, and that's really on the back of the pent-up demand that we're seeing for these auto vehicles going into the new financial year and into the year thereafter. So if we look at Tharisa in the context of the PGM world, we have that sort of 42.8 million ounces contained in our resource of long life. And importantly, we have a very unique prill split on a 6E basis, just short of 55% platinum, 15.8% palladium, 9.77% rhodium, 14.65% ruthenium, and 4.63% iridium. If we then look at ourselves on a 4E basis, platinum, palladium, rhodium, and gold. We have negligible gold, but importantly, our rhodium content is one of the highest in the Bushveld complex at 12%. What this equates to is a very healthy PGM basket price on a 4E basis of $2,850 odd, and on a 6E basis, some $2,500 per ounce. In terms of global supply, we supply from a primary perspective around 1.4% of global platinum, 0.4% palladium, and approximately 2.1% of rhodium. You can see our neighbors in South Africa in the Bushveld complex, major PGM producers, Sibanye and Impala. Moving on to the chrome market, this truly is a South Africa-China nexus and a story that is of the haves and have-nots. South Africa contains 72% of global chrome reserves. China literally has zero chrome reserves. They're wholly dependent on the importation of chrome to make their steel stainless. It is irreplaceable in its function and its purpose in stainless steel production. When one looks at the dynamics here, you'll see that South Africa is the main importer or exporter into China, accounting for over 80% of Chinese imports for their stainless steel industry. Most of this comes from primary production, some 75%, and 25% as a byproduct of platinum producers. The stainless steel market is very interesting. It's driven by strong fundamentals, not only in China and through domestic consumption, but globally. We've seen a global trend in terms of growth and forecast to grow on a global basis at 5% CAGR. If we look at South Africa in the context of the chrome world, we produced 1.5 million tons in this last year and accounted for around 10% of Chinese imports. So a key strategic supplier. I think importantly, not all of our production is destined for stainless steel, and some 25% is what we refer to as specialty grade chrome concentrates, and these command a premium and are more diversified in terms of geography and jurisdiction. So we really enjoy those products, and in fact, we have very strong market share in terms of the chemical grade industry. Vulcan now coming on stream will add an additional 25% output, or some 400,000 tons, really pushing us down the cost curve and making us even more strategic in terms of that supply. When one looks at the growth in context, that 5% compounded annual growth rate equates to an additional 1.8 million tons of chrome needed to fulfill those stainless steel requirements. So it's the equivalent to another Tharisa mine coming online in the next 12 to 24 months. So we see the market and demand very healthy around the chrome products that we produce. In terms of Zimbabwe, we'll be producing between 90 and 120,000 tons from that operation. It is a premium product and will command higher prices than our South African ores. So in conclusion, we always come back to safety and health of our people. It is a core value, and it really talks to the well-being of all our stakeholders. We strive for global best practice. We use technology as an enabler. We have modern operations, mechanized, skilled labor force, and we believe we have a sustainable, scalable business with an exciting growth profile going forward. Chris, that's it from me. Thank you very much.
Okay, thank you very much, Phoevos. Yes, we've got time, I think, a few minutes to ask you some questions. Thanks for a lovely presentation. So, how do you sell? All spot prices or also long-term contracts?
So in terms of chrome, it's a bilateral agreement. So we have long-term volume contracts with our customers, but it follows a spot market or an average of the month of trade. So typically that's more of a negotiated bilateral trade. In terms of platinum group metals, we take the average of the month of the sale for platinum and palladium, so we hedge that. And we try and smooth out the volatility on a monthly basis. The other elements are not hedgeable, unfortunately, rhodium, iridium, and ruthenium, and therefore we get paid in terms of our concentrate agreements, and those are delayed payments, so they're deferred. So there is an adjustment that filters through, but on average, we achieve a fair representation of the market. Yeah.
Okay. Someone's pointed out that there was a fire recently at the Richards Bay Port Terminal in South Africa.
Correct.
And so how is that going to affect the company, obviously, in the export of chrome and manganese, etc.?
Yeah, so certainly the logistics pipeline in South Africa has been constrained over the last 12 months. There's been a lot of pressure on the rail network. So we've moved a lot of cargo to road, but the port fires that were recently experienced resulted in a force majeure over the last few days. It has been lifted as of today, and normal port activities have resumed. So it does create a bit of a bottleneck and a bit of a delay, but in effect we manage it, and hence our wholly owned logistics subsidiary that manages those risks and looks at diverting cargoes as best as possible. But I think it's fair to note that the global supply chain and freight market is under pressure, and so availability of vessels and the cost thereof is certainly a factor that we consider going into the new year.
Yeah, I think that's fair to say that it's affecting everybody, isn't it? With all the, I mean, a very positive presentation, some good numbers. Do you think that the share price should be higher? You're undervalued currently?
Yeah, we always think that we're undervalued, and I think if you ask anyone, they'll tell you the same thing. But you know, we look at with the analysts' forecast, we look at our own internal models, and certainly we believe there's lots of upside, and we look at the multiples that others are trading at, and I think it does provide some upside in terms of share appreciation.
And the Zimbabwe project you touched upon, is that going to be expensive in the short term in terms of capex?
So we look at capital intensity per ounce, and we look at what happens in the industry, and I think it's on the lower end of that intensity, and we've taken it in a measured approach. So we haven't gone for a massive operation up front. So this is what we refer to as phase one, and it's sequential, modular, and measured. It is a new territory, it's a new jurisdiction, and you know, we take credence from the other operators in the area and understand the challenges and risks that they've faced over the years, and try and mitigate those through our negotiations with the Zimbabwean government.
Excellent. And we've got time. One last quick one. Somebody mentioned about a possible listing in the States. Is that on cards at all next year?
Not that I'm aware of, but
no.
Yeah, no, we always look at our jurisdictions of our listings, Johannesburg, London. We haven't any plans at this stage to list in North America. Okay.
Well, I think we're out of time. Because you give us a very complete and concise presentation, Phoevos. So thank you very much for joining us this evening, and we wish you well. Say good night.
Thank you, and thanks to all your viewers.